The dollar bounce has knocked the wind out of gold's momentum, says Peter Hugg, Global Trading Director for Kitco Metals, who joins me now. Peter, good to have you back on the show.
Nice to be here.
So, Peter, gold failed again to push through the 1265 level yesterday, and momentum traders took profits. The overnight strength of the dollar accelerated the selling. Is this another blow to gold here, Peter?
I think it's likely a temporary phenomenon, but you know what gold has been lacking here is momentum follow through, and it certainly appeared yesterday that it was going to try to get through that 1265 level. It stalled, and you know, after the run up of the $25, traders took some money off the table, and then overnight the dollar strengthened somewhat against the yen and the euro. And that just created additional selling from the European theater, and we found ourselves in the mid-40s from you know, a high 50s close yesterday.
And you mentioned the yen here, Peter. Tell us why this is such a crucial play to follow when we're talking gold.
Well, there is some psychology to the yen. I mean, what investors have been doing with negative rates in Japan has been borrowing yen, converting either to dollars or investing in the Japanese stock market. For almost zero cost. Unfortunately, the Japanese stock market has been under pressure over the past 6 weeks. So as people unravel the trade, they've been having to rebuy the yen to unravel that the carry trade in the equity market. Now, the issue with that is Japan has forcibly set negative interest rates to try to depreciate the yen to attract more business for their manufacturing base. But the fact that investors are borrowing at negative rates and now are reversing that position has actually strengthened the yen even with negative rates. Now, gold has been correlated to some extent to the yen. The yen, to some extent, is considered by traders as a somewhat of a safe haven play. And as the yen has strengthened, you've had a situation where gold has looked to that as a safe haven play, and you've had some sympathy buying in the gold market. Now, there are some issues with that trade because of the reversal in the yen overnight, although I believe it may still be temporary. But the finance minister of Japan has made it very clear any surge in the yen is going to be met with intervention. So that's taken a little bit of the edge off the yen and is also then created some selling in the gold market.
All right, Peter. And what about silver? It's having a good week here so far. Is it time to get in?
You know, I'm almost there. Some of the data that came out of China today was better. Their trade data was the best in the last 3 months. Some of the economic U.S. data that was just released with the Fed Beige Book is indicating that there is starting to be some semblance of continued growth in the U.S. So I'm looking to be aggressive silver once I get a sense that the economic activity is starting to turn. I still do not have that sense out of Europe. So this may be a false breakout from a ratio perspective to gold. But, you know, should we get any further good economic data coming out of China especially, and Europe to some extent, I think silver, even if gold does not move, is undervalued relative to gold. And, you know, we could see silver break out to the upside.
Great thoughts, Peter. Thanks so much for joining us.
You're welcome.
And thanks for watching. We'll see you tomorrow.